Well, good evening, everyone. Welcome back to the channel. It's been about 5 days since I've uploaded a video. All I can say is sorry to keep you waiting. Complicated business behind the scenes. Just finished my MBA Wednesday. So that's not something that happens every day. So I've been quite busy, but from here on out, I plan to get back to daily uploads if I can. I was on a really good track before my little hiatus, and I got to get back on track now. Funny thing, my MBA is not like the end all. I've got one more class left and I'll have a dual master's. I'll have a master's in finance. So I'll truly be a master of the subject. So with all that being said, today I wanted to discuss the um, the bull market that we've all of a sudden found ourselves back in. And I would officially declare it a bull market if no one else is bold enough to, because I just looked at everything before I started this video. The Nasdaq's popped 20%, the S&P's popped about 17%, and the Dow's popped about 13%. So I mean, that's to me over 10%. Like that looks like the start of a at least short-term bull market to me. And I think I was almost accurate in calling the bottom. Didn't quite get it right because I thought we had a little bit more to drop, but the precise timing on these things is rather tricky. I think we hit peak bad news like mid June when we got our, or I guess early July, right, when we got our 9.1% CPI number, and then we got our next month of 75 basis point interest rate hikes, um, which that's probably still going to continue, but it seems like I really believe the market, if the market has a mind of its own, so to speak, like the market wants to be bullish. Like the market desperately wants to rebound. Like our economy, our capitalist free enterprise economy, you're not going to hold it down for long. That's the thing. No matter how good or bad, policies are behind the scenes. But it really feels like lately we're back into the market we were in like a year or two ago, and things have popped rather quickly. I mean, I got into two leaps, but I wish I would have gotten into a lot more. Nvidia and Meta, and of course, I just got like one contract each, but I probably wish I would have got like 10, because I mean, this market is popping. I'm up 40% already in both of those. And what I want to discuss today, I've never done a video on PayPal before, but it amazes me how this stock was. It looked like it was becoming garbage not that long ago. I mean, it dropped below 70 to $69 a share back a month ago. Like so, in less than a month, this stock has rebounded 45%. That is astonishing. And if you had gotten an option in the stock, I mean, you would be doing incredibly well. So the funny thing, just like that, my strategy has had to change again to adapt, because I was starting to do covered call premiums and even poor man's covered call premiums, buying leaps and then selling calls against the leaps. Well, I've had to amend my approach again rather quickly because I got burned on some of those. And I actually got assigned on a couple of them, which I'll do other videos on. But definitely learned a lot about different option strategies this year, and the pluses and minuses. But like I've always said, my favorite option strategy is the long calls and the leaps. And that's what I'm getting back to. I think going forward, like for me personally, instead of buying stocks in the percentage of the portfolio that I allocate to buying individual stocks, I think I'm going to replace individual stocks with leaps, because leaps do phenomenally better because of the leverage. You have control over 100 shares of the stock instead of just one share. So, and plus, if it has like a delta of 50 or above, for every dollar increase in the stock price, that option is going to increase, if it's a delta of 50, it's going to increase 50 times. Of course, theta, time decay, can work against you. But with leaps being a year or more out, you don't have to worry about that as much. But anyway, today I want to analyze PayPal, and I'm very bullish on PayPal, actually. One of the first options I ever did, which was a miss, I actually had it expire worthless because I stayed in until expiration, thinking that it would rebound. I think I was quite foolish, actually, because I had like a $500 gain in it, and I thought it was going to keep running up. So I got greedy. And then next thing you know, because the way options work, the market can turn against you one day, especially if you're in a short term to expiration. The market can turn against you very quickly. And the next thing you know, you can go from a $500 gain one day to a loss like that. But with leaps, that's why I say leaps are better, because the time to expiration is much further out, so you don't have to worry about that as much. But anyway, so PayPal, one day I'll do more options on these, if not soon, like in the next week. I definitely will in the future. But let's look at it. So if we go back to the insane market that we had last year, which some people call the clown market, like you had the apes, the AMC meme stock investors, GameStop stocks like that. It was just silly what was happening. Um, so if you go back to August 30th, PayPal was at almost $300 a share stock. In fact, the 52-week high for PayPal is 296.70, and close to the 52-week low just a month ago was at, I said 69, it was at 67.58. Of course, the number 69 is more amusing than 67.58 for obvious reasons, but it's back over $100. And I knew once it crossed that psychological threshold of $100, I kind of had a feeling that it would keep rolling. But the thing is, like at least for me, I mean, I can't sit here and buy every one of these stocks all day. I mean, I don't have that luxury of time. Like I said, I'm over here completing master's degrees, working full time, involved in all kinds of stuff. So I'd love to just be sitting here all day and saying, "Oh, buy this, buy that," like I'm at the casino, except behind my computer screen. Like I'd love to have that luxury, and maybe I'll get there one day. I mean, that kind of, I guess, is the goal. But what I see, so the 1 year target estimate for PayPal is $120. Price to earnings ratio is still high. And what I want to point out, because I've started to really look at these ratios again, like Amazon. If you take a look at Amazon, a lot of people are buying into that because they see the split, the post split price, and they're thinking, wow, this may be like a rare chance to get into the stock at such a low price because it was just a $3,000 stock not that long ago. But if you look at the PE ratio, which again is the price to earnings ratio, for Amazon, it's like 100 and something. But for Meta, which I got a leap option in Meta, I think is one of the most undervalued stocks right now. I think the PE was like 15 or something, which is insane. That's getting to like a Warren Buffett level of like discounted stocks. I mean, it's rare in this market to see a PE that low. Actually, it's even lower than I said. I'm looking here. It's 14.84, whereas Amazon is 125. So Amazon right now is trading at 125 times earnings. And if you ever want to kind of figure that out, we'll do a quick example here with PayPal because that's our case study stock today, our case stock. You'll look at the PE ratio. So right now this stock is trading at 57.44 times earnings. So you have to figure, so the price of the stock is at $101.10. So if you divide that by the earnings per share, you're going to get the price to earnings. So basically, to get the price of the stock in this situation, you could times the 1.76 earnings per share over here that I'm going to highlight by the 57.44. And there you see it highlighted there. I don't want all those other rows. And then, yeah, you get the price of the stock. Amazing, like magic, right? That's what these ratios can kind of give you different indicators if you're not looking at balance sheets and fundamentals, which you absolutely should. And that's what we're going to do next. But yeah, you can see trading volume, average volume. Yahoo's saying it's near fair value. I'm actually going to start, the more of these stock videos I do, I'm going to actually start going into like Ameritrade, and I'm going to pull up like what used to be called the S&P reports, but now they're called like the CBRE reports, or I forget what it is, but they're really good. They rate stocks on a 1 to 5 star scale, and the analysts go in. Of course, some people don't really value analyst opinions. I mean, opinions are, like fill in the blank. Everyone has one, right? But sometimes the analysts are not really that far ahead of the curve. But it's still the most information you can look over, the better off you are, I think. But anyway, so let's look at, so PayPal recently beat their Q2 earnings pretty significantly, which helped the stock run up. And we don't have a projection yet for Q3 earnings, but that's going to come out November 7th. So what tends to happen, the brilliant analysts in their infinite wisdom, when a company beats earnings, they'll raise the projection after the companies beat the earnings. They'll typically raise it somewhere around where the green circle is down here, where the earnings beat was. And what happens when you raise a projection? Well, the probability of beating that next projection drops. So then I mean, this is a very, like, in some ways predictable thing because human behavior is tends to be reactive, right? So when a stock does that, when the earnings projection comes out higher and then it misses, oh, there's a sell off all of a sudden, and then the trading volume is going towards the sell side, and then all of a sudden the stock drops, and then put options become good again, and all of a sudden, but then the next quarter you'll see the opposite. So this charade kind of goes on all the time with a lot of companies, and the funny thing is, like, that's a pretty basic observation. Like, you don't really have to have a lot of education to figure that out. You could just watch this for a couple of quarters and you could figure that out. But you can say that to some people, like even some of you watching this video may think that that was like a genius level observation on my part. But really, it's not. It just comes with practice and studying the markets and studying patterns, so to speak. Because that my prediction, and we can pull this back up in November when the earnings come out to see if I'm right. Of course, they could beat earnings again because the funny thing, if you looked at like the CPI data this week, so inflation finally dropped by like 0.4%, and the market went nuts. Like, we had this huge pop in major indexes this week over a 0.4% decrease in inflation. And it's funny, like I say, the market, it's like intrinsically the market, if it had a mind of its own, it really wants to be up long term. So it's funny how it's like there's this massive sell off, which made sense when we had the 9.1% CPI number come in. But then when we dropped to like 8.5%, or let me pull it up and see what it was to be exact. Forex Factory, my favorite source for market news here. Let's go back to, and I think the pop actually came the next day. This was CPI. I think the number was like 8.5% or something. Oh, here, this is the Purdue. Wait, that's Japan. What am I looking at? I know this number came out this week. I thought it was like 8.5. Well, this is saying that doesn't make any sense, but I guess that's the projected increase. It was high. It was less than the forecast, so the market was happy with that. But anyway, I'm not sure why the site has it in red, but I thought that would come up here. Let me just see CPI number August 2022. Funny thing, I read an article that said today that said Gen Z doesn't Google stuff, which I don't know where people come up with some of this stuff, but I kind of found that rather interesting. I'm not going to digress too far from the main point here if I can't find this, but I'm pretty sure it was like 8.5%, and it was like 0.4% lower than what it was expected to be. So, all right, I'm not going to spend any more time on that. Let's get back to the main point of the video here. So yeah, PayPal neutral chart pattern detected. Doesn't pay a dividend, and I mean, I think this is probably going to run a bit more. This is still kind of an earnings blast scenario. Let's look at how the options did today, because like I said, I'm a big believer this is where the real money's made in the markets. These are expiring today. Now, sometimes, in case you wonder, because I've been talking a lot about leaps, the appeal to getting into a more long-term option or a more short-term option is there's a lot more upside, like in the short term, because you're so close to expiration. I mean, theta is going to bite you also, but like you can see one here that was way out of the money. Actually, we won't look at that one. But let's look at, like, so today these options came into the money here, which if you were in this today, you would have wanted to get out of this today. Otherwise, you're going to probably get assigned the shares, right? So look at these. Here's one that was up almost 100% today. That's phenomenal, like 100% gain in one day. That's the appeal to these shorter term options. When you're close to the money like that and you get in, you can have a massive gain. You can also lose everything if it expires out of the money. Like if you buy one, like what would this have cost today? So this would have probably, let's see, this opened at, well, it says 210 right here, but let's just pull it up just for fun. And then I won't get into the fundamentals. I'll just probably end the video after this. Okay, so this was up $1.03 today. So this opened the day at $1.07. So that means that one contract in this should have cost, I believe, $107, right? So then if you got 10 contracts, and this is where the fun happens. So if you got 10 contracts of this at $1.07, that would have been $1,070. So you would have probably made $1,030 on this today, net of trading fees and stuff, which aren't that bad. But the trading fees still exist for options. The brokers waived them for stocks, but they still exist for options. So that's a pretty nice gain in a day. I mean, the average income certainly is not $1,000 in a day, but it's more of a gamble like this if you're going towards expiration like that, like the day of expiration. That's a pretty big gamble. You might as well be at the casino with all your chips, more or less. But if you go way far out, like the furthest one available, January 19th, 2024. And if I've lost anybody, remember, just go back and watch the video over and over again. It's always great to watch videos multiple times, right? Helps me too. So let's look at the ones that are way far out. And let's look at some strike prices. Like, see, the ones that are further out of the money did better. That's a 17% gain here for 185, for 145%. You can see the different gains today. Let's go to like September. Oh, that's the only one available before that. Well, I guess that makes sense because that's like a quarter before. They add more, in case you're wondering, they'll add more the further we get to those dates. They'll add like a March 2024 and then a June 2024. But so let's see the September ones here. Yeah, see, we're further out, so these aren't going to do as well. But you get the idea with options. I mean, obviously, a lot of money is made. So, with that being said, I think I've rambled on quite a while here, probably too long. So, let me go ahead and end that. If you enjoyed that, please remember to like, comment, and subscribe. Not sure why I have a Pepto Bismol ad in the middle of my screen, but yeah, those gains can maybe make you a little queasy or not. But anyway, thanks so much for watching. Take care, and I'll try to get back to daily uploads. So yeah, that's it for today. Thanks again.